The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Tuesday, the 4th of February, and we're looking at the Dow up. Oh, it's now up 7 at 44,427. So the question I had and the answer I gave for my subscribers in my opening call this morning was, on Friday, the Dow missed an all-time high by 20 points. So I said, was Friday a test of the all-time high? And was that just a one-off interruption over the weekend with the tariffs that just kind of stopped the market in its place, resolved itself intraday yesterday, and the market should just continue doing what it was doing? That's my opinion. That's what I think is happening right now. One of the reasons why all we did is we got a little insurance on the Dow through the DOG 1-to-1 short, but we're keeping the 3 times long, even though we got a little bit out right at the exact top on Friday. I want to remain along the Dow only because look at the strength of the 9-period moving average above the 14-period moving average. Look at the MACD turning down. The histogram's just turning down, but look at the gap, how strong it is. The stochastic, I'm a little worried because it came down very sharply to 85%. That's still very good, but it is declining. And the on-balance volume did pull back with that abrupt turnaround from the Friday close into Monday intraday. Look at the weekly chart. It's got this beautiful left side, right side price time match, which says somewhere between the week of February the 14th, somewhere in that range, a little bit before, a little bit after, we should at least attempt to get to the 45,054 area. Is that going to happen? Well, we'll see. Monthly chart and the technicals here are different because the 9-period moving average is fabulous. It is making an M-shaped pattern in the weekly chart. The stochastic did, because of yesterday's action, did pull back a little bit. It didn't get to the 80%. It's at 67%, so it's lagging with the on-balance volume. But the MACD had the sense of deflecting lower. But if this week closes strong, it can get close to, if it closes positive, the price of whatever we're following, in this case, the Dow, should go higher. This is a weekly chart. So in that case, we've got tremendous support in the 44,000 area. We're at 44,423. And let's go on. So the S&P, the SPX.X, is trading at 6,024, up almost 30 points. Very nice. The 9-period moving average did not, with all that negativity, that 9-period moving average is still strongly above the 14, and you're going to be able to deflect from the low and get back into the 60-33 area or even higher over the next day or so. The weekly chart is still strong. Monthly chart is still strong. Let's go to the QQQ. The QQQ up 5.78 to 523.92. Yeah, it's also the same thing. Look at this. A couple of times, the 9-period moving average pulled back. But look at the strength. When the price pulled sharply below the 14-period moving average, there wasn't a budge in the 9-period moving average. So that's a good springboard to say that the opening price of this candle of the 31st, that's Friday, which was at 531.52 in the QQQ. That would be the upside target over the next couple of days. It's a big ask, but that's the way it looks. And the weekly chart is still strong. Monthly chart is still strong. Let's go to the IWM, which has been the weakest today. It is up $1.93, up 8.85%. That's one of the better readings. The QQQ is up 1.17. So, yeah, it's good. But it's trying to get back into this technique that I developed a long time ago, and I've discussed here many times, and it works a lot of the time. So I always put it in. It's called the Chapman Wave Insight. In this case, because it's declining, it's a diagonal trending from the left side high to the right side low. And that just says this inside track repellent zone, we were above it for two days, but couldn't close above it. Went way below it, hit the pink level yesterday, but it went much lower and hit the pink level. That's the inside track. First, if you can get over the pink, you can hit the green. If you get over the green, that's already positive, and then close above it. That's important. MACD's okay. Stochastics weak at 71%. On-balance volume is not good. Monthly chart has also the same thing. Look how many times it's been under 1, 2, 3, 4, 5, 6, 7. Out of 8 weeks, it's gone under the 14-period moving average 7 times, and yet that's still green. That's what a wonderful indicator that is. So there should still be higher prices. We'll see. Next thing we want to look at here is going to be the SMHs. The SMH. I'm not doing I didn't do the 10 a.m. news because I couldn't get through, but we got through. Everything got worked out very nicely. So I'm here and I can take my time. The SMHs are up 347 at 242.26. This is very interesting. We're stuck in this range. You've just gone back into the rectangle. How many? This is months. This is going on since August. So actually, you started that right there. That was the low, and I chose that as my in August, the last week of August 2024, 236.78 was the low, and I drew this line and said this rectangle with those highs should be this should be a containment area for the semis, and lo and behold, it's been that containment area. Because I like to do things timely, and I just want to go to the futures because I said momentary resistance here at the 60.45 level, but it's still strong. I've got this as a leg B in the 5-minute chart. I've got this as a leg B in the 10-minute chart. Really nice move. I had this I always grumble, right? I had this at 60.12 as a potential one-click session. Well, it was a one-click session, except I didn't get back in. I did a one-click session, and I didn't realize that it automated just a very tight 2-point stop. And I got stopped out, and I didn't realize that while I was doing my newsletter. And I looked back, and it's already taken off. So that would have been a 2-click session when I would have said, okay, one click in, and you can wait. Sometimes you can wait until 4 o'clock that day. I don't think this is the kind of day. I'm just saying that it would have been a 2-click session because I could have waited and waited and waited. And here it is at 60.50. That is frustrating. Okay, so this would be a brand new A, B, C, D, E. We're right now at a level where I'm going to call that F/A, because that's E/A, F/B, G/C. So that's a C, and that's a D in the Chapman wave methodology. That is a D, uppercase on the way up. Oops, C, and a D, and an E. So we got a little resistance level right here. So, and as I say, leg B, and there should be at least 2 higher peaks in the 5-minute chart and in the 10-minute chart to get to Ds. All right, so let's get back to our story over here. Let's go. Oh, there's the music. So before we get to the break, I wanted to show you something very interesting. Remember we were talking about the volatility index? I spent a little time on that yesterday. So the volatility index came tumbling down from just over 20. It's at 17.42 right now. What speed? Look at that. How every time there's just a quick pop-up and it gives it back. Will this be shorter? This is only 4 days and it went to pop-up. I think that we're looking at some support level. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks, we're back. So a number of questions just came in, so I need to go back to the ones that I got in email. So one of them was, Basil, in your peak Ds, you said that there was a leg D in the Dow and then a peak D when? How does that work? So let me just do this. So look, in the Chapman methodology, we try to identify, where did I type that? Probably in the den or somewhere. Okay, let's just do that again. INDU. In the Chapman methodology, we try to identify the lowest low bar, and count each successively higher peak alphabetically, A, B, C, D, uppercase on the way up. It can even go to E, F, and G, but D is where other things can happen. It can have the sharpest decline. It can have within 3 bars, if it makes a new high after that peak, that becomes E, and you can use an alternate count saying E, maybe A, for a brand new buy mode, because sometimes those peak Ds, if within 3 bars you get an instant restart, it can actually take you up to another 4 peaks. And there are different ways of looking at it. So it's very important, but the objective is to get you from a buy signal to a buy mode saying that you should get to at least a peak D. All right? So where did we go? We started at that low that was made on the 13th of January, where we added to our long positions. Then 41,844 in the Dow. We went peak A, peak B, peak C, struggled, and then went to a nominal D. And where did D go? 45,054. 20 points below, just under 20 points below, 45,073, 18 points, right? Yeah, something like that, on the 4th of December. So this is absolutely a peak D. Well, there was look how many bad news. We've had that deep seek. We've had everything come together. And every time the resilience of this market has been astounding. So I did not want to, I have to wait for a peak D. Sometimes over the decades, some of you know that I've gone to a short in the Dow at a D when I've got sort of an alternate count, and maybe the diamonds have gone only to a C and the Dow's gone to a D. I might wait. There are a whole bunch of things, but usually D's where I start to look for at least a counter trend move for a breather, right? So this move early yesterday morning, when we were really down sharply, this time we were coming back already. But when we went down sharply, I said, Nothing's right about this move. It looks to me as if that D should have continued on Friday, but that sudden turnaround with a statement by President Trump, wow, I mean, look at that. But now we're coming back quite nicely. So that's number one. Number two is my technical indicators are still saying that there is upward momentum. Now, does that mean that we got an all-time high? Does it mean to say we fail? You have to go one step at a time. I need, first of all, to close above yesterday's high. And then it says to me, now we're in the body of the red candle. That's good. So I like to go one step at a time. So we've got the 1-to-1 insurance, the 3-to-1 on the long side. So we're missing one of the three. But at the same time, I'm just getting ready. I'm saying I don't see what people are talking about to say this is the end of the world. And every single one of those politicians that came out railing and talking about, I mean, over the weekend, how many people heard about everything that they're going to buy is going to be soaring in costs, right? They can scare the daylights out. Learn how to look at your charts and try your I find it difficult sometimes. Try to avoid what the media is saying, especially if you know who the media is. And remember, the media is working for their bosses. And if the bosses have a particular a conservative or a progressive or whatever slant they have, everybody below is going to have that same slant. So that's all you got to do. Okay, finish. Peak D, we've done peak D. Now we're in the process of seeing whether or not we can go above that or whether we break the low of yesterday. Those are the two criteria, right? And now, the other thing is, question came in. About tariffs. So I have the same attitude right now. Personally, I love the fact that he said he'll give about a month because I have to be away for a little while, and I want to be here when everything hits the fan, right? So to me, that sounds fine. So I don't know about the EU tariffs. It'll be the same. He's always used this technique. Remember, I spoke about this years ago. In fact, I spoke about this when I first came here because I wrote a paper back in 1980, before the big crash of 87, for Barron's with my partner at the time. He did the stocks. I did the socioeconomic and some of the movement based on the Dow and history, etc. Talking for, in fact, it was on TFNN used to have it as a little segment on education. It came in a book. It was part of a talk I gave for the Harvard Psychiatry Medical School, where they invited a lot. I mean, really, I was there with some very famous technicians at the time, giving a talk, and there was a book that was called. The Psychology of Investing. I think Lifson was one of the we put the book together, actually. He was the organizer of the whole convention. So anyway, Trump has been always on my list. And I've always called him a 51%er. All he wants to do is to win. It doesn't matter by how much, just as long as you say, I want, right? So keep that in your mind, whether it's a positive or negative. I couldn't care. That's just what he does. So in this regard, I don't know about the EU. All I can say is we're looking at it, and I'm just saying to you, it's very important that you try to isolate all the noise from the facts. Look here, even in the E-mini, it's felt like, oh my goodness, it's going to pull back. It went to a peak F right there in the 1 minute chart. A B, only a B in the 5 minute. This could be wrong, but it's a B in the it's a B in the 10 minute chart. So now let's do this. NVIDIA question came in. So NVIDIA, this is a B in the 5 minute chart for NVIDIA in this latest iteration. Let me just go back. So let me I see you. I got to always pull back. The idea of the Chapman wave is to find the lowest low bar and count each successively higher peak. So here we go. A, from the gap down open, it's got A, B, C, D. D is the objective. That's where other things can happen. And lo and behold, D is where other things happen in a pullback from the 118 area. Comes down, starts another buy mode. It goes A, B, C. Now mine's not automated. Mine has to be done by hand. So Steve has done a great job with his automations. It doesn't take some of the subtleties that for me are really important in my work, but it does a really good job. C1, and I'm calling this C2. Yeah, this is exactly an example of it, and C3. Excuse me, still got the COVID, but I'm getting much, much better. And this becomes a brand new A and a B. At least that's how I'm counting it. But I like to be very conservative when I do this. It's just over the 200-period moving average. That's very good. So I think, okay, C1, C2, C3, but that really could be the D, and that could be an E/B. But the pink, it did go pink. And this looks like it's a brand new fresh start. Look, the on-balance volume, everything turned up. So I'm calling this at 120.09. I'm calling this B. But if it starts to go under 119, I'm going to say, uh-oh, now you got to be a little careful. So, and I like to put them together so that I can tell you that NVIDIA so this is A, B, C, D. And you see, I've got a D in the 10-minute chart. If you put them together, you say that 200-period moving average is important. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So let me just finish this here. So just first, the E-mini made a peak F in the 1 minute chart. The 5 minute chart is pulling back. I have this as a B. There could be an alternative count. I don't need that right now. It's a leg B, and the support is between 60.43, 44 and 60.42. Right? Excuse me. So we've got NVIDIA 5 minute chart. NVDA. I had an alternate count. I knew there was something wrong. I was just doing it too quickly, Eddie. So this is what we've got. We've got that peak A, B, C, D. Pretty easy. That went to the 11 o'clock time frame. 11 o'clock time frame? What are we doing now? We're 10:30. Why does it say 11 o'clock? Oh, that's not today. Oh, goodness, this is getting to me. And then we had another pullback. This was at 1 o'clock on the... yesterday, I guess it was, on the 3rd. Today's the 4th, yeah. So there goes peak A. But then under it had an A and a B. You can't exclude those. Uh-oh. Coughing. Here we go. Go right back. So I made this in big pink to show you A, B, C, and that's C1, C2, C3. I'm sorry, everybody. It's just a little upsetting to hear. Goes to peak D. So this could be an alternate count, E/F. But this is really an E to an F. I'm calling this a B for now. I have no reason why I shouldn't. Look, all the technicals are still very good. The 200-period moving average of 119.48. That might be tested. If it goes under that, how long you stay is going to be the thing. But this is the count that I've got for now. But as I said before, the 10 minute is the one that really guides me. And the 1 minute chart is the speedboat. This is the one that races around the corner, the 1 minute chart, and does everything very quickly. And more importantly, what you're looking at is that 200 period in the 5 minute chart. That is really the way it bounced off it. It's trying to make that a propellant line rather than a magnet. And that's very important. All right, let's get back to our stories here, and let's go on. So I didn't finish my analysis, so we got gold. Gold had a fabulous move yesterday, considering it was down quite sharply, and it's continuing high today at 2,872, up 15.7. Leg D. This is a leg C in the weekly chart, so this is all very good. Gold continues contract, leg D. We remain long our gold position. Let's go to silver. Silver, and I almost did that today, was an alternate to go to silver, or something that we had been in, got stopped out, and I really liked the action, so we've gone back into that. Let's see if that's going to work out. So silver right now is playing catch-up. It's gone to a leg E. 33.33 was the left side, right side price time match that I was looking at from that peak C back in early December at 33.33, and I said that by the 7th, we should hit that level. We might do today. Today's 33.19. So very close. Leg E, very strong action. And let's go on. We're going to go to, and this could turn out to be an instant restart, because within 3 bars, you went from a D to a leg E. And that means it could be EA, but we don't have to do that yet. The weekly chart has gone to an A and a B. All right, the last one was an F or a C. It failed, but now I can start to draw in the cup formation right there. So, I always talk about cat and mouse. This is gold and silver. The one leads, the other follows, and the other one stops, and the other one takes over. They play a little relay race and chase them race. And right now, silver's trying to catch up to gold, and that's always good. When silver starts to catch up, gold will take a breather, silver will continue, then gold will go a little higher, and silver will take, then they both take a big breather. We haven't got to that stage just yet. We're getting close. Next question came in about high-grade copper. Another cough. Oh, man. I can't imagine listening to this. Like being at a medical office. I was at a medical office last week, was it? Yeah, last week. This was something completely, this is just a formal checkup. And I'm sitting there listening, and I hear this woman talking, and she's talking to this other woman. You can't help it. You're in the waiting room. And then the other says, are you going to the game? I think, oh, okay. Well, she said, oh, sure. My son owns the team. She said, your son owns the team? She said, yeah, he bought it a long time. He spoke to me, and I encouraged him. I said, yep, buy the team. So I'm thinking, this is like someone just recently bought some kind of a team. I'm thinking, this is Boston, this is Chestnut Hill. I'm sitting in the doctor's office, Chestnut. So the lady says, which team? She says, the Eagles. So I think Eagles. I'm familiar with the Eagles. I actually don't watch too much football, but yeah, I know Eagles. So yeah, she said, yeah, my son and I, he was here, so I'll be going to the game. Yeah, I'll be going to the game. So I'm there with my cell phone. I check up Eagles, and then the owner, whoever he is, was from the Boston area, but he seemed to be kind of old, and she didn't look that old. But I don't know. But that's what the talk was, and she was still talking about it when I went into for my checkup. So that was the lady whose son owns the Eagles. Now that could be a long time. I don't know when it is. It must have been ages ago. Interesting, huh? So here we go. So we're talking about high-grade copper. I got to that through various. You can see how my mind gets a little taken away there. So yeah, finally we've got high-grade copper moving, and that is good. So the question is, SCC, is that moving? Well, for the first time, it's moving. FCX, it's a Southern Copper. Now we're going to go to Freeport-McMoRan. Yes, it's moving for the first time. Is this a big move? You know what? Commodities are starting to move almost independently. Let me just swing around to get my pen. Oh, this is the second pen I just dropped. It's one of those days, huh? So you miss your entry into the E-mini. And now you've got all your pens on the floor. All right, so we're looking at FCX. Yeah, it's starting to move, and that's a good sign. All right, next question came in. So wait, I didn't do the support level. I'm sorry. I always like to look at both sides. So the support level for silver is going to be 32 to 31.70. It's at 33.12 right now. That's number one. Number two is the SLV. I'm not sure if the question was SLV or silver, but I'm going to say the SLV, that's a G/C. Oh, and it took out the left side high. You remember I said there's a slightly difference. This is a little quicker in motion than the silver itself, and the weekly chart, doesn't quite look the same. So silver's looking very good. It's the SLV is at 29.36, up 68 cents today. Very nice action. So support for that, if that's what you're asking, is 28.41 to 28.19. That's kind of the support area. All right, and I just wanted to go to the futures as we're going along here. Oh, look, there's NVIDIA holding very nicely. ESH25 going to leg C.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So you remember how strong the 914 was in the 5-minute chart of the evening? So we've gone to leg C. Struggling a little bit. Why? Because it's bumping into Chapman wave, automated resistance and support level. In this case, it's the resistance level. Look at that. Bunch of clusters at 659. 658, 657. We'll see if it breaks through. That's going to be really, really important. All right, let's continue. So a question came in. So this is G, but I'm calling this a G/C in the SLV. So that's why, because there was an instant restart there. It's not a traditional one, but I have to A, B, C, D. Actually, you know what? I'm not doing that, because the idea is to always count every single peak from the low. In this case, that's the low, so that becomes an A. But that becomes an A right there, and then that becomes a B, and then that becomes C, and that becomes D. There you are. Okay, everything's gone. Right. Okay, so we're done with that. Next thing we're looking at, thank you, GT. So a comment, I like to look at the social aspect, socioeconomic, to put it all together to see if we're getting close to any kind of top. I see no top at all in terms of all the things that I look at that I would expect for. I'm talking a major top. I'm talking about a 1929 type top, which people are talking about. So GT sent me this women wearing men's suits. As first of all, as men, is that correct? As women, 1890s to 1920s, and then there was one that said the same thing, and it's 90. Oh, I can't get it in right now. So it's also till present day, and then evidently Melania Trump had a suit on. That looked a little bit like a man's suit, but it was a pantsuit, basically. So, there are certain things that are coming back, and they're going to be coming back stronger and stronger. All of these things are really important. Okay, another question came in. Well, let me just get to it here. Okay, so I'm done with that. Oh, don't tell me I made a mistake. Of course I made a mistake. All right, here we go. 1, 2, click. I just want to, okay, done. So the question came in about, I saw this in the Den earlier, and it reminded me, today's story day, I guess. A question came in about India. So I was invited to a talk by a very prominent person from one of the big funds in the Boston area back in October. And he spoke about, he spoke about the general economy, what you expect and all that, all those little subtleties, about Trump coming in. And I thought, I know which side this guy's on. But he was being as gracious as he could. It was forced graciousness, but he was being gracious. But he had a big question. You can tell he had just a big question about Trump. And I was a little surprised because he's in the financial business. He should know that Trump has an agenda, which in a way kind of suits the economic side. Forget about all the other stuff. I'm talking about that's all I'm talking about right now is the economic side and the market. Anyway, so he goes on. It was very good. I mean, he covered all the stuff that that he should cover, interest rates, all that stuff. And then as someone asked him a question, and he wasn't asked a question. He says, "I'm saving this for last." And then he went on and he started speaking about India. It turns out he was born in India, but I think he studied in America. So he spoke about the India Fund, INDA. iShares India Fund is what I could get. I don't have India, the market itself. So it was back in October of last year, right? So he was talking about it, and I'd heard this from others as well, and I would think about it, then I'd forget about it, then I'd think about it, then someone would remind me, and I kept looking and say, India Fund, I hear a lot. And then he spoke about how industries, the young people are just totally interested in business and in the internet, and they do math, and they're well prepared and all that. And this India Fund should do fantastically. So I'm thinking about this, and I thought, I've got it. And I did my homework on it. Of course, I came home and I did my homework, and it had made a daily peak D right there on the 26th of September. It made a peak D. That doji candle, the tiniest, you go to an all-time high and you got a doji, the tiniest little doji candle. Does that make sense? Right, that's an exhaustion move right there at 59.49, right? And then what happens? It makes a complete U-turn. It makes the lowest low that is made since April of 2024, just the other day, and now it's starting to turn up. It went under the 200-period exponential moving average, and it didn't come back again, and it hasn't come back again. It's trying to turn up here. So I was fascinated because I saw it in the day, and I thought, that reminds me of, I can't remember his name now, but he was speaking about the India Fund, and it went from the 56 level down to 49, right there, down to 49.91. So that's not a big deal. 6 points is about 12%, but it did take a tumble. But this is something to keep on your list because I agree with them, but I don't know about the timing, right? Just look at that chart. Peak D in the weekly, peak D in the monthly. Okay, that's that. Next question came in. In the den there was one, SOXS. So I thought about this morning, but I think that the semiconductors are still very much under pressure. And you have advanced micro devices coming out, 116.71 up 2.44, right on the 200-period moving average. Remember, do I have time? I'll do this really quickly. Let me show you something about advanced micro devices. I do this every once in a while. Every year I do it, maybe once. Advanced micro devices I have followed since. I can just see that I can't get the letters in the right order. What was it? Sandler, something like that. This guy was just, he used to wear these white suits and also say, he was quite a guy. So it was Advanced Micro Devices, I think was him. And I had seen this thing go from the single digits to the 30s and 40s, and then back down again. I used to have this so well notated. I'll do it again someday. And then it goes from the 4s back in 2002 to 42, peak D, in March of 2006. Comes tumbling down to $1.62 in 2008. Goes to a peak D at about 9 or 10. Comes back down. Doesn't take out the left side low. It does. It goes down to 1.81. So it goes a little higher than the 1.62. Anyway, it starts a whole series of peak Ds. This is famous for Ds as far as I'm concerned. D. In the monthly charts, it goes to a D, then an E. But then it goes to an F. at 34.14. Then it pulls back. This time it goes to the 18 level. And what does it do? It soars to a PG at 164.46 in November of 2021. And look at this, pulls back to 50. And then it goes to 227 in March of 2024. I think this is going to be very interesting. Does it hold this time? Can it do it again? Advanced Micro Devices. Sandler would be proud, whatever his name was.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, so we're all back, and yeah, it was, I just looked it up. Excuse me. Jerry Sanders was the CEO of Advanced Micro Devices from 1969 to 2002, was an electrical engineer and co-founder of the company. And it wasn't Colonel Sanders in the white suit, but I remember him well. He was a fun guy to listen to. All right, next question came in, and that was about the semiconductors, the SOXX. And so I'd prefer to go to the SMHs. You can just apply exactly the same. It's the same chart, really. So I'm looking at this, and I think it's Advanced Micro Devices comes out today, whatever it is. Look at this. There is so much resistance. That 200-period moving average is like a magnet. That's why I'm saying this is a very, very specific type of thing. That's why today I went to a stock that I had said we're going to look to see what stocks are holding well on any decline in the next couple of days. So I took one that we had been in. We just got stopped out, and it did very nicely. So I wanted it on a sharp pullback today. We got it. I don't know if it's going to work. You don't know. You just do your homework and you have your technical look, and that's the way it is. So I'm just saying that the SMHs have to go, look, pink 244 is the pink 9-period moving average. It's at 241 right now. 3 points should be nothing for this thing, and it's not moving up yet. And you can look at the weekly chart. The weekly chart 9-period moving average is very close to turning down. That's why I'm saying this is a very mixed market. You want to be, I'm tired of looking at things that I'm waiting for them to perform. I want them to be performing. We've done best when we've stuck with our long positions with the AIQ, the ETF for the whole sector, the artificial intelligence. ARK, I think, is doing great. ARKK, Robinhood. What's working is working, and that you have to stay with that kind of thing. So with that said, what's working is that I'm going to take a break, and I'll be back with Jacob a little later on, and have a wonderful rest of the day. I'll be back soon. Check out my opening call, my daily newsletter, and we'll see if we make that PT leg D to the 60-60 level in the E-mini.